Okay, so that brings us to the cash receipts journal. And for the cash receipts journal, this is cash coming in for any reason. So as you can, let's change this to a highlighter. So as you can see here, the debit is always to cash. And then the credit is to something else. So in the sales journal, it was always the same for accounts. So it was even simpler. This one's a little bit more complicated because what we've got going is we know the debit's always to cash, but the credit could be for a couple things. But the fact is, we've got two main things that the cash could be coming in for, and then we'll have an other. So the two main sources of cash coming in are, one, people paying on their accounts receivable. So the debit would be to cash, and the credit would be to accounts receivable. The second main reason that we'd have cash coming in is for a cash sale. So the debit would be to cash, and the credit would be to sales revenue. But if I have that, then I also have the debit to cost of goods sold and the credit to merchandise inventory. So if cash is coming in for a sale, I would have the sales revenue, would have the second part. And if they didn't take the discount, remember when I record the sale, remember from chapter 5, when I record the sale, I assume they're going to take the discount. And if they don't, I would have this. So right now I have two scenarios, cash coming in, number 1, for accounts receivable, or cash coming in, number 2, for sale, in which case I'd have these three things. And then if it's not one of those, we put this other category. And if it's other, I have to go over here and say which account was credited. Okay? So the credit, the debit's always to cash. The credit's either accounts receivable, sales, or something else. And if it's something else, I have to go over here. For example, this first transaction, I'm going to go back to the highlighter. The first transaction, I can see I debited cash and I credited sales. So that was a cash sale. I don't have to put an account here because I already said right here, this is the account I'm crediting. And then we also know I would have debited cost of goods sold and credited merchandise inventory if I had a sale, and that's for $290. The second transaction here, the debit is to cash and the credit is to other. And so then I had to go over here and say what it is. The other was to notes payable. The third transaction here is somebody paying on their accounts receivable. So I've got a debit to cash, a credit to accounts receivable, and then I need to say which accounts receivable that is. Because remember, I'm keeping track by customer, so I have to know who paid me. And then you've got another cash sale and some other things. You've got some interest revenue. So this is what that looks like. Again, it's a little bit hard to read on here, but you can look in your book. I post these guys to my accounts receivable daily. The rest of these are probably posted once a month. Oh no, I want this to be the pen. Daily updates to the accounts receivable subsidiary. And then monthly, I post the totals. And if we, it's going to be a little bit hard to read, but if we look on this one, we can, well, we'll see it on the next one. That'll be easier to read on the next one. And then once I've posted it, I'm going to flip back to this one. Oops, so you can, come on. Sorry. Come on. I don't know why I'm having so much trouble here. Sorry. There we go. If it's an accounts receivable subsidiary ledger, I just put a check once I post it. If it's another account, like notes payable or interest revenue, I have to put the account number that I posted that to. I'm not really sure why this is lagging behind me here, but so let's try one of these. This is a cash receipts journal, and so I've got 4 transactions here where money's coming in. So the first one here is on July 5th. I sold merchandise inventory for cash. So I'm debiting cash, and I'm crediting sales revenue for the amount of the sale, and then I debit cost of goods sold and credit merchandise inventory. The debit and the credit for that transaction are $1,400. And that's all I have to do. On the 12th, I collected interest revenue So my debit is to cash. And you know, when you're doing this, you can always go back to what you would have done in chapter 2 or 5 or any place. What would I have debited and what would I have credited to help you fill it in here? So I would have debited cash, and it would have gone to interest revenue. So that's going to go under my other, and I have to tell it which account I credited, and that's interest revenue. And then on the 18th, Heidi next paid on her account. So on 7/18, I would have debited cash because she paid me. I would have credited accounts receivable. And then I have to tell it which accounts receivable, which customer's account I credited. And that would be H next. And then on the 29th, Mitch Dillon paid me to settle his account in full, including the sales discount forfeited. So the sale was for $5,300, but when I recorded that sale, I was assuming he was gonna take this $20 discount. So I would have debited accounts receivable for the $5,300 minus the $20 discount. I would have debited accounts receivable $5,280 and credited sales revenue $5,280, and then I would have had cost of goods sold. Look, it's already written there. Cost of goods sold and merchandise inventory for something, right? And so now he's paying me, all right? So the amount he's paying me is $5,300, but I would have only credited or debited his accounts receivable for $5,280. So $5,280 is all I can put in here. And then the other $20 goes to the sales discounts forfeited. So I'd have one debit and two credits, and then I need to make sure I note that this was for Mitch Dillon's account, so I show that he paid there. So that's for 7-6, or for problem 7-6. That's all I have to do. For the next one, 7-7, they said, okay, total up each column. So if I total these on 7/31, the total cash I collected or debited was $10,250. The total credits to accounts receivable are $64.80, and then revenue was 17. Sales discounts forfeited was 20. The total in the other was just that one transaction. And then the total debit to cost of goods sold and total credit to merchandise inventory was $1,400. That's a little hard to read right there. 2050. And so that takes care of this one. Now it says we're going to post to the subsidiary ledgers first, okay? So we're going to post these two transactions right here, update the subsidiary ledgers. But what they're telling me is they started with a balance in each of these. So Dylan's account has a balance of $5,280, and Next has a balance of $2,250. Those are accounts receivable, they're assets, so they'll have a debit balance, and so then we are going to post the credits here. We credited each of their accounts. So we'll update those. So this is what this one looks like, right? We start with a debit balance of 52. Oops, that's a little hard to read. We start with a debit balance of $5,280. That's what it told me right here. Accounts receivable, he had a balance of $5,280. And then on the 29th, he paid, so he credited $5,280. So then the new balance in that account, new balance, or the amount now owed, is 0. Next started with $2,250. That's what they told me right here. She started with $2,250 in her account. And then she paid me on July 18th, so I credited her account $1,200. And so now I take the $2,250 minus the $1,200, and her new balance, the amount now owed, is $1,050. So that's showing that she made a payment, but she still owes me $1,050, and Dylan doesn't owe anything because he paid in full. So that takes care of part 2. Part 3 says to open all these ledger accounts, and we've got balances in cash accounts receivable, merchandise inventory, sales revenue has a balance, sales discounts forfeited, and interest revenue do not have a balance, and cost of goods sold has a balance of 14.5. So we're going to open up those and then post all of these totals across here. So this is what this one looks like. We've got a couple of these here. So cash, I started with $4,550. I debited, so I add those together, and my new balance is $1,480. Accounts receivable started with a debit balance of $75.30. I credited it when I got those payments in, right? So the new balance is $1,050, which is the sum of these two, right? 0 plus 1050 gives me a total of 1050, and that's what's showing right here. Merchandise inventory, I started with 32.5. That's what they told me right here, right? Merchandise inventory, 32.5. And then if I go back to my account, I can see that I credited merchandise inventory for a total of 1,400. So credit 1,400, my new balance is 1,850. And so all of these things, right, are just coming off of the total column from my my cash receipts journal. Sales revenue started with a credit balance of 2,500. I credited another 1,700, and that's right here, right? That's where that credit came from. It says right here, I credited sales revenue for a total of 1,700. So that's what I post to this ledger right here. And my new balance is 26.7. Sales discounts forfeited has a credit balance. I started with 0. I credited 20. My new balance is 20. Interest revenue started with 0, and I credited $20.50 this month, and so that's my new balance. And then cost of goods sold is an expense, so I start with a debit balance. I debited another $1,400. That is off of this total right here, right? Cost of goods sold, I debited $1,400, and so my new balance is $15.9. And then once I post everything to the subsidiary ledgers or the accounts, so I check these off to show I posted those to subsidiary ledgers, and then I fill in the accounts, right? So this I posted to count 111, this I posted to count 112, 411, 412, and these account numbers were all given right here, right? These are my accounts. Interest revenue is 419, so I put that there, and then this I posted to cost of goods sold was the debit, that's account 511, and merchandise inventory was the credit, that is account 118, based on these account numbers that they gave me here. And so once those numbers are filled in, sorry, that says 411, that's how I know that everything has been posted. And so that's your cash receipts journal. Again, it's always the debit to cash. The credit will probably be to accounts receivable or sales revenue. If not, then it goes into the other. And if you have the sales, you also have to do the cost of goods sold and merchandise inventory part. Okay. The purchase journal is number 3. And these are for purchases made on account. Purchase on account. So the credit is always going to be to accounts payable. Okay. The debit is probably going to be merchandise inventory. Okay. Or the other common one you might see is office supplies, and if it's not one of those two, then it goes under other. So it's this, or this, or this. Another company might have a different thing, but what you're going to put here is your most common ones, okay? So for these guys, merchandise inventory or office supplies are the main things I purchase on account, but I'm going to put an other column here, and if it's other, I have to say what account it is. And so you can see this is the person that I owe the money to, the vendor, the terms, the posting will be to the subsidiary ledger, and if I have an other account, I have to put that in. Again, these totals, I'll just post at the end of the month, is what it says here. And so I'll take this total and I'll debit merchandise inventory $17.60 at the end of the month. These guys are posted daily. You don't have to post the total because this is going to one account and this is going to another account, so this total isn't getting posted to a specific account. And this is what that looks like, right? Each of these are posted daily. And then these totals are posted monthly to these specific accounts. So let's do one of these. On October 1st, I purchased merchandise inventory on account, terms for 10, net 30 from the Meyer Company for $2,200. So on 10/1, the vendor account or the subsidiary accounts payable is the Meyer Company. The terms are 4/10, net 30. I'm not going to post that down yet. And so I purchased inventory. So if I were doing that on a regular journal entry, I'd be debiting merchandise inventory, crediting accounts payable for $2,200. So that's what I'm going to do here. I'm going to debit merchandise inventory, credit accounts payable, $2,200. And that's all I have to do. Once I post it to the ledger, I'll go back and put the post reference in, but for now I'm not going to do that. On the 11th, I purchased office supplies from the Bird Company, terms net end of month. So the vendor is the Bird Company. The terms are net end of month. I am debiting office supplies and crediting accounts payable for that transaction, and that's all I have to do. And then on the 24th, I purchased furniture, $900, terms 310, net 60 from the Silly Company. Silly Company, terms 310, net 60. And so I will debit this is going to go under the other. So I'm going to debit, the account name is furniture, $900, and credit accounts payable, $900. And so that takes care of my 3 transactions for things that I purchased on account. Again, I'm still debiting office supplies and crediting accounts payable. I'm still debiting furniture and crediting accounts payable. And so I just put all those guys in this one, and so I have one line for each instead of multiple. The next problem, number 9, says, okay, take what you did in 8 and do the totals. So my totals are a total of $3,700 in accounts payable, $2,200 to merchandise inventory, $600 to office supplies, and $900 in the other. Again, the credit is always to accounts payable, and the debit is either here or here or here. Debit, debit, debit. So that's my totals. Then it says open the following accounts payable. So I've got 1, 2, 3 subsidiary accounts. I guess all of them have 0 balances. And so I'm going to post these 3 transactions right here for the accounts payable. And so this is a liability, so it has a credit balance that's normal. They each started with 0, and I credit them. And so here's the new balance in each of those accounts. Once I have updated those subsidiary accounts, you can see here it's coming from the purchase journal, page 6, and then there's the date of the transaction. This is what happened in this transaction, and then this just always keeps track of my new balance. It's hard to see that, I think, since all of these started with 0 balance, but hopefully you remember that from chapter 2. And then I can go back and say, yep, I posted each of those to the subsidiary ledger. And then it says open these ledger accounts. So we've got inventory, supplies, furniture. None of them have a balance. So then we are going to post these totals from here, right? And so I'm going to debit merchandise inventory 22, debit office supplies, debit furniture for 600. And so that looks like this. Oh, and my total, this is my total to accounts payable. So merchandise inventory has a debit balance, office supplies has a debit balance, furniture has a debit balance, and accounts payable has a credit balance. So then I can go back to my purchase journal and update the accounts that I posted these totals to. And so those goes with the total. I posted 3,700 to account 211 on a credit. Merchandise inventory is account number 115. Supplies is 116. And my furniture, it told me here is account 151. So that's what I put in here to let it know I posted that one. And that should be all of that. So I'm going to, let's see, I'm going to stop here and post this video up, and then I'll come back for the cash payments in just a little bit here on our general journal.